Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And hold on just a moment. Need to adjust my screen resolution. And just as a reminder, on YouTube, I am streaming at 1080p. That's what I just did. I'm watching another computer so I can see my stream and see the chat on YouTube. And it was a little fuzzy, so I changed the resolution to 1080p, and now it looks great. All right, here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of the channel and the topics of my presentation. And finally, I'm on X, formerly known as Twitter. My name there is @Pless. And note that Bookmap Discord is free and available to everyone, whether you subscribe to Bookmap or not. There's a lot of great content there. The focus of my presentation today and the focus of the Options-Doug chat channel is order flow, options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focused on an underlying asset, and setups in that asset can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel on Discord as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello Z, welcome, glad you're here. All right, here's my agenda for today, Friday, January 5th. First of all, I want to go over news items, economic data, and events for today, as well as the, just for today, and that will wrap up the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then finally I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, so there were two data releases this morning. And let's go to the S&P 500 and we'll take a look at the reaction to the data releases. So this is the 8:30 a.m. employment report data. Initial reaction was bearish, and that data came in much greater than expected, also greater than the previous number. So good news for the economy. Positive jobs report. Initial reaction was negative, and then that turned around and became bullish. And then at 10 a.m., the services PMI came out. This is the reaction to the services PMI. and that was less than expected, less than previous, but still greater than 50. So still indicating expansion, but less than, again, less than expected, less than previous, and apparently that was interpreted as bullish also. And of course that wraps up the week for data releases. All right, let's get to positional analysis now. I want to start with the my positional analysis for the S&P 500. This is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to the underlying index here, that is the SPX. This is a one-day chart in Thinkorswim. This is showing the rally that began October 30th. Rallied for a variety of reasons. IV collapse, put Vanna rally, falling treasury yields, somewhat dovish FOMC, better than expected inflation reports, and anyway that rally came to a halt at the very end of last year and the beginning of this year. And so it remains to be seen whether this is the start of something new or just a consolidation or a small correction. All right, let's take a look now at a 1 hour chart. Again, this is SPX, the underlying index for the S&P 500. 1 hour chart. Now I talked about this yesterday, this 4,700 level acting as support. Initially on December 14th. Then December 20th, this was the mini flash crash. And also 4,800 acting as resistance. And price didn't quite make it up to 4,800. And then yesterday, we'll take a look at that. And let's take a quick look at the 1 minute chart. So yesterday, the SPX broke below 4,700. There's 4,700 right at the close. All right, let's get back to the 1 hour chart. Let me check for questions. All right, driver courses. Hello, welcome, glad you're here. Z asks, what are the settings on your Bookmap or indicators? I'll get to that in a few minutes. Let me wrap up this positional analysis, and then we'll take a look at Bookmap. And just in case you're interested, I do offer one-on-one mentoring. If you have questions about Bookmap, how I use Bookmap, how I use Spotgamma in more detail, I do offer one-on-one mentoring. You can get in touch with me through Discord. Again, my name on Discord is Doug P. All right, so let's get back to the 1 hour chart. I want to focus on the levels now. So first of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. I update this once a week. And note that SPX is trading below the lower daily expected move that has been more or less acting as resistance. So SPX has broken that weekly expected move to the downside. Then the dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, updated once a day. The upper weekly expected move, I update that once a week, and that remains in place until the next weekend. So there's the upper and lower daily expected move. SPX trading within that range. Looks like it tested the upper daily expected move earlier today. The dark red lines are showing Spotgamma levels. These are proprietary Spotgamma levels available to Spotgamma subscribers, shown on a variety of trading platforms. This is Thinkorswim. I'm going to point out the key daily levels. First of all, here's the put wall at 4,600. That's a strike with the largest net negative delta that can be expected to act as support. The next level up is the 4,700 level that I've been talking about. That's the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. So that's where most of the gamma weighted open interest is concentrated. That level did move lower from yesterday, from 4,800 yesterday to 4,700 today. The next level up, just above that, is the volatility trigger at 4720. That is Spotgamma's proprietary gamma volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to subdue or decrease volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And note that SPX is trading below the volatility trigger in a negative gamma environment. And all this week, gamma notional has been shifting lower from positive on Tuesday, still positive but less positive on Wednesday, negative yesterday, and then more negative today. That's gamma notional. We'll take a closer look at that in just a minute. All right, so again, SPX trading below the volatility trigger in a negative gamma environment. And then finally, the call wall has moved up to all the way up to 5,000. That's a strike with the largest net positive gamma that can be expected to act as resistance, and that's most likely due to the addition of puts at the previous call wall at 4,800. So the call wall is a strike with the largest net positive gamma. So positive gamma minus negative gamma, call gamma minus put gamma, and that now has moved up to 5,000. So well out of play. All right, so those are the key daily levels. Shifts in levels. Volatility trigger, minor shift higher, 5 points. As I mentioned, the call wall shifted significantly higher, and the absolute gamma strike shifted lower. So kind of a mixed picture for the levels for SPX. Finally, let's take a look at a 1 minute chart just to get go back to this chart, take a quick look at the levels in play for today. So this dark portion on the right, that is the regular trading hours for today. I'm showing a portion of yesterday, and this 4,700 level. Actually, let me zoom out on this. $4,700 level has been tested a number of times. Day before yesterday, Wednesday, yesterday SPX opened below and moved up above, and then at the end of the day there were multiple tests of that level, and then SPX finally broke lower. All right. Excuse me, getting back today, so SPX again opened below the 4,700 level, rallied pretty quickly up to this level right here. This is the 4720 volatility trigger that was noted as resistance in the Spotgamma AM Founders Note, and it did its job very well, acting as resistance. And I actually posted this in Discord. And also note the upper daily expected move just below that level. And that final test of 47.20 acted as a great entry point for a short. All right, let's take a look at Bookmap now. So again, SPX, the underlying asset or index. And in Bookmap, I have my own cloud nodes, so I can show those SPX levels. There's the 47.20 level that acted as resistance. I'm also showing SPY levels. So there's the SPY 470 absolute gamma strike, 0 gamma level, just below that. I guess really helping to reinforce that resistance. And note earlier today, support just after the 8:30 a.m. Data release. This was there are two white lines there. The lower white line is actually SPX 4665 that was noted as support, and the Spotgamma founder's note did its job again. Also below that, the lower daily expected move. And then just above that is the SPY 465 put wall. And note that that cluster of levels did act as support earlier today. Lower daily expected move 4665 noted as support, and also the SPY 465 put wall. Excuse me, I had to clear my throat. All right, so those are the levels in play for today. On the downside, the 4665, 465 put wall. On the upside, the 4720 volatility trigger noted as resistance, and the 470 level. So again, I have SPX levels, SPY levels, and also ES levels. So this is upper daily expected move, lower weekly expected move for ES. There, lower daily expected move for ES, and then here's the ES 4750 level. So I have one column of notes here, including all those different types of notes, and I update that every day in my spreadsheet. Also note that these index relationships, ES minus SPX, also ES to SPY, those change a little bit every day. And I post the index relationships that I'm using in Discord typically around 10 a.m. All right, so that's the S&P 500. Let's take a look at Nasdaq now. And for SPY, there were no shifts in levels. Volatility trigger, put wall, call wall, absolute gamma strike, all remained unchanged from yesterday. And here is the Nasdaq Q futures, NQ futures. And give me just a moment. Let me check something. Okay. All right, so this is NQ futures and Bookmap. And one thing I want to do, first of all, is focus on or take a quick look at a QQQ chart just to see the levels in play for today. Note right after the 8:30 a.m. Eastern Time data release, this 394 level, around that level, QQQ 394, acted as support. Note the put wall at 395 just above that. And then QQQ struggled around the 399 level, which is the absolute gamma strike. So the trend break was right around, depending on how you look at it, right around that 399 level. All right, let's take a quick look at NDX, the other underlying index, or I guess really the main underlying index for the NQ. And note, here's the 425 volatility trigger just above, 16,425 volatility trigger. And note one thing I forgot to mention, there is a difference in price. I mentioned the index relationships. For the S&P 500, there is a difference in price between ES and SPX. And right now, it is somewhere between 38 and 39. And today I'm using 38. So ES minus SPX equals 38. That's what I'm using. And NQ minus NDX equals 158. That's what I'm using today. All right, so here's that. Whoops, wrong tool. The 16,425 volatility trigger NDX just above the upper daily expected move for Nasdaq, acting as resistance. Here's that QQQ 394 level that acted as support earlier today. Here's the 395 put wall. So again, I have QQQ levels, NDX levels, and then other important NQ levels, all in one column here in my cloud notes. So those are the levels in play for today for the Nasdaq. And for Nasdaq, NDX, the put wall shifted higher to 16,000. Otherwise, there were no shifts in levels for QQQ. So overall, fairly minor shifts in levels for both the S&P 500 and Nasdaq, even though there was a pretty substantial drop yesterday. And one other thing about yesterday, the VIX was only up 0.09, given the large drop yesterday. So that was I guess somewhat puzzling, really, and really indicating to me that traders were not too concerned, not reaching for puts, given the again the move down yesterday. All right, let's take a look at gamma notional now. I'm going to go to, this is the Spotgamma AM Founders note. Look, I'm looking at the data table at the bottom of the note. I want to focus on gamma notional. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. And I look at this every day. It gives me a sense of how market makers may react during the day, and also get a feeling for the potential volatility and trading range for the day. So these numbers, except for NDX, which is really not significant, are negative, more negative than yesterday, have been dropping all week. So this indicates for an index, Spotgamma assumes that traders are long puts, market makers are short puts, and so in a negative gamma environment, they have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. All right, so all negative except for NDX, which is not really significant. All right, let's take a look at the Vanna model now to get a sense of what that means. I'm going to start with SPX. What this chart is showing is market maker's delta notional on the vertical axis the price for SPX on the horizontal axis. There are two curves on this chart. The first light gray curve shows how market makers' delta notional may change with changes in price only. The purple curve adds implied volatility to the equation. That shows how market makers' delta notional may change with changes in price and implied volatility. And that change in delta with a change in implied volatility is the Vanna effect. Vanna is a second order Greek. Let's take a look at, let's go back to the SPX chart, see where it's trading now. So the low of the day was right around 46.84. High of the day just above 47.20. All right, let's take a look at 46.84 first. Somewhere around here. So what this is showing is on this left portion of the curve, if price continued to drop, market makers' delta notional will increase. So price dropping and implied volatility increasing, market makers would need to sell futures. Their delta exposure is rising. Remember, they always want to remain delta neutral. On the other hand, if price starts to move up like it is moving now, market makers' delta notional will decrease, and they can buy back their short futures. And that's a put Vanna rally. And let's go check. So somewhere between these two lines is was the high of the day. And so what this is showing, this works both ways. As price was dropping down toward the low of the day, market makers' delta notional was increasing, and they had to sell futures to hedge their delta exposure. All right, so again, that works both ways. In this negative gamma environment, market makers trading with price to hedge their delta exposure, and that tends to enhance or increase volatility. And typically in a negative gamma environment, especially one that is becoming more negative, trading below volatility trigger, I'm looking for a wider trading range and more trend days rather than range days that are more typical in a positive gamma environment. All right, let's check SPY. SPY currently trading. And hello, Floyd's Garage. Welcome. Glad you're here. SPY currently trading right around 468. Toward the bottom of the curve now. But again, on this left portion, indicating if price drops, market makers will need to sell futures to hedge their delta exposure. It may not be much of a Vanna tailwind left for a put Vanna rally. And then finally, let's check QQQ. All right, QQQ trading right around 397. So toward the bottom portion of this curve. All right, let me check for questions. All right, GH asks, what are the three main areas of Bookmap you think are most important? Not sure I can come up with that answer. I may pick three things from Bookmap and Spotgamma. And GH also asks, do market makers have more in-depth info on Bookmaps as far deep as info goes? I'm not sure I understand your question. So market makers, options market makers, really all they're doing is making market. So if you buy a call, market makers are selling the calls, and they have to, let's say you're buying an SPX call, market makers would have to, and let's say you're a large institution with enough, a large enough order that would cause market makers to hedge. They have to hedge that with ES futures. So I don't know if they have any more in-depth information that we do. I think with Bookmap and Spotgamma, for a retail trader, this is pretty incredible amount of information, getting to the bottom of what is actually driving price. All right, let's take a look at some setups now. So I want to start with the S&P 500. Let me zoom back out. So what this chart is showing is the hero signal, hedging impact, real-time options. There are two lines on this chart. The first, the white line, is showing price for SPX. The purple line is the hero signal. Again, hedging impact, real-time options. This is available from Spotgamma to Spotgamma subscribers. A rising purple line indicates traders are taking positive delta positions, buying calls and or selling puts. Market makers are taking the opposite side of that, and they have to buy futures to hedge their delta exposure. On the other hand, a falling line indicates traders are taking negative delta positions, and they're taking negative delta positions in this combined signal of SPX, SPY, XSP, and ES futures. So the purple line, again, is showing options trades, market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. All right, let's zoom back in here so we can see this full screen. So in the morning from the open, traders were taking positive delta positions. And we can separate out puts and calls. So what that's just showing, the rising orange line, is showing that traders were buying calls from the open, and just a few minutes later they started selling puts. So the call line is the orange line. The orange, when rising orange line, indicates traders are buying calls. Market makers sell the calls, and they have to buy ES futures to hedge their delta exposure. And again, the blue line is the put line. Rising blue line indicates traders are selling puts. That's positive delta. And a falling blue line indicates traders are buying puts. All right, so there are really two key setups here. First, in the morning, long, following the call buyers. And note at 10:10, they took their foot off the gas. They stopped buying calls, started selling calls, and at the same time they started buying puts. So the orange line and blue line initially in the morning were rising, and right around 10:10 they shifted and started moving down, and price responded lower. It took a while. It took almost an hour, actually over an hour, for price to really respond lower. And what price was doing, the S&P 500 was chopping around this 4720 hedge wall. Again, that's the level that was noted as resistance in the Spotgamma AM Founders Note. So let's go take a look at Bookmap, and that's what I posted in Discord. Let's go back to the total signal. So it's maybe a little bit more clear here to see that right at 10:20 at the hedge wall, options traders took their foot off the gas, and then price started to fall after chopping around that level for about an hour. So one good small short setup, a scalp there, and then a longer term if you're patient waiting on it again. All right, let's go take a look at Bookmap. All right, so here's the long setup in the morning. And remember, initially this was the move really started after the reaction to the 8:30 a.m. data release, the jobs report. Here's the cash open 9:30 a.m. Eastern Time. Just a slight pullback as the trend continues. Reaction to the 10 a.m. data. And note at that time, after that move up, large traders started selling that move with iceberg orders. That's shown by this falling light blue line and also these on-chart indicators. These are not large, but large traders were selling that move higher, selling the strength with iceberg orders. They used to hide their size. And note the volume dots, good entry points for longs. The volume dots are showing market buy minus sell. So all these pullbacks, magenta dots showing more sellers than buyers, and then green volume dots showing more buyers than sellers. So at this zoom level, maybe the pullbacks are a little bit difficult to see, but every time sellers move price slightly down, then aggressive buyers start to come in, again shown by the green volume dots. And then this was also a stop run. So note the sharp increase in this dark blue line, that's cumulative volume delta. Also the line here, that is stop orders, buy stop orders. So a stop run up to resistance, and the S&P 500 chops around that level for about an hour and then finally starts to move lower as traders were taking negative delta positions, selling calls and buying puts. All right, let me check for questions. All right, GH. If the three most important things that I'm looking at for day trading are, first of all, order flow and Bookmap, and I can't isolate. I'm looking at the volume dots, the stop orders, iceberg orders, and the heat map in Bookmap, and then also these levels are very important to me. I'm a levels trader. I like to see, I'm looking for reactions at key levels. That's why I focus so much on these levels, because I know that 4720 is here, and now it makes perfect sense to me why price is stalling in that level, because I expected it to act as resistance. So order flow and Bookmap, levels, and these are levels mostly based on Spotgamma, and then I'm looking at the hedging flow, options trades and hedging flow on Hero. So those are the three most important things that I'm looking at. All right, GH also asks, is Spotgamma and Bookmap, or must we subscribe, pay to Spotgamma directly? Well, the answer to the question is yes. So Bookmap and Spotgamma are separate products. There was a long time ago, the Hero signal was a subchart indicator in Bookmap. That was the first version of Hero. That has long since been deprecated. So it is now part of the Spotgamma subscription. Spotgamma has a variety of levels of subscription. If you want the Hero signal, you have to get the Alpha subscription. So Bookmap and Spotgamma are separate. Actually, the Spotgamma does provide their own cloud notes for Bookmap and another variety of trading platforms. Again, Thinkorswim, TradingView, I think NinjaTrader. I prefer to use my own cloud notes so I can show all of these levels in one set of notes here. All right, Metatron asked for stops and icebergs, what values do I use? Also says great presentation. Thank you very much. You're welcome. Thank you for your kind words. All right, so let's take a quick look at settings. And the main thing for the subchart, let's take a look at the subchart. I like sum mode. That's what I'm showing the in the subchart, sum mode, so I can see the cumulative effect of stops and icebergs. Other people use other settings. This is what I like. So I can see the events with the on-chart indicators. And I can quickly show my visual settings here. And you can take a screenshot of this or watch the recording later. So this is the settings that I have for icebergs, and I suggest you maybe, if you want, start with this and then adjust it to what you want to see. All right, so there's the icebergs and stops. All right, so there was an earlier question about what indicator Z asked. So I'm using, in Bookmap, I have stops, icebergs, that's part of the MBO bundle. That's an add-on that you have to subscribe to in the Bookmap marketplace. And CVD, that's included with all versions of Bookmap. I have it in the subchart here. That is the line that changes from pink, indicating negative CVD, to positive dark blue. And then I'm also using this price lines indicator. That's what I use for my cloud notes. That is a third-party add-on. You could purchase that in Bookmap Marketplace. And then there are a lot of indicators that that are available that I'm just not using right now. All right, Z asked, what do I look for in order flow? I talk about that every day. I'm looking at the volume dots and the liquidity and the heat map. I talked about a setup in the with the heat map earlier this week. So the heat map is showing the history of the limit orders in the order book. And GH asks, iceberg showing or an extra cost of Bookmap? Yeah. So if you want to see stops and icebergs, there are a couple of requirements. First of all, you need to subscribe to Rhythmic Data. So stops and icebergs are only available for CME futures, not available for stocks, only CME futures. And you need Rhythmic Data. Rhythmic is the only data provider that provides the market by order, MBO orders that the stops and icebergs indicator uses. And then you need to subscribe to the MBO bundle in the Bookmap marketplace. All right, hope that answers your question. All right, let's take a look at Nasdaq now. Very similar chart pattern. I've already talked about support at the 394 level, resistance just below the upper daily expected move in the NDX 425 level. All right, let's take a look at options trades to see what options traders are doing. And before I wrap up, I just want to emphasize this. This is a very typical pattern. This is still for the S&P 500. Very aggressive options buyers or sellers in the morning, in this case call buyers, put sellers, they take their foot off the gas and price consolidates, then moves lower. Very, very typical pattern. It occurs over and over again. A couple of ways to play this. In a positive gamma environment, you probably just want to sell a call spread or buy a put spread as price reaches that resistance level, whatever you're looking at. And then in a negative gamma environment where you're expecting more, a larger trading range, more movement, you might want to consider buying a put instead, or just selling futures or selling SPY shares. All right, so very typical pattern. And again, this is what I posted in Discord, this short setup. All right, let's take a look at Nasdaq now. So this, again, this is a combined signal for S&P 500. This is a combined signal for the Nasdaq 100 with NDX and QQQ, and just a very opposite picture today. From the open, traders were taking negative delta positions. So to get more clarity, we can take a look at one other signal. This is Mag 7. Let me just zoom out a second. So this is another combined signal showing options trades and market maker hedging activity for a combined signal for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. And this gives this often gives a more clear picture of options trades and market maker hedging activity that has an impact on the Nasdaq. So I always check the signal. This is a recent addition to Spotgamma Hero. That is a great addition, great indicator. And here, this is showing that options traders were taking, give me just a moment, let's zoom in again. Options traders were taking positive delta positions in the Mag 7 up until about 11:15. Then they started taking negative delta positions and price reversed lower. All right, let's go take a look at, go back to Bookmap. So we know those stocks are a very large component of S&P 500 and especially the Nasdaq 100. So there's the reversal just after 11 at levels that we expect to act as resistance, the upper daily expected move and the NDX volatility trigger. So watching order flow, I can see that aggressive sellers, sorry, wrong tool. So actually, let's take a look. So first of all, trend break right at the 399 level, also the NQ 550 level. Large magenta volume dot, aggressive sellers coming in. Again, the volume dot showing market buy minus sell. So traders were taking negative delta positions in the Nasdaq, and price started to move lower. So very nice long setup from the open, traders taking positive delta positions in Nasdaq, and as that options trades and hedging flow shift from positive delta to negative delta, price reverses lower, and we can see the clues in Bookmap as well. All right, let's take a quick look at some stocks First, I want to take a look at AMD. And bullish morning in AMD. Note that 140 is the call wall and the key gamma strike. Let's go see what options traders are doing. Let's go to AMD. So this is the pattern that I've talked about over and over again. Traders aggressive in the morning, taking positive delta positions. Price moves up just a little past this resistance level, the 140 call wall, key gamma strike. Options traders take their foot off the gas. Price consolidates or moves lower. Let's just take one closer look and see what they were doing. So they were buying calls. Traders buy calls, market makers sell the calls, and they have to buy AMD stock to hedge their delta exposure. All right, so there's AMD. The next is Amazon. All right, GH asked, when a stock gets halted, does Bookmap show the order flow still there? Does anything happen? I don't know. I think the order flow would just stop. I don't trade stocks that are so small that they would get halted. I mean, you see the stocks that I'm trading. These are very large cap tech stocks. This is all. These are all the stocks that I trade. They'll never get halted. We never say never, but it would be very unlikely. These are very large, large market cap, large tech stocks, very liquid stock and options markets, and often driven by options trades. That's why I focus on these stocks. All right, so here's Amazon. Similar to AMD, traders buying calls aggressively in the morning, shown by the rising orange lines. Sorry about that. Spotgamma is still working on this issue. Traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Let me zoom in just a bit. And note this flow alert just right after the open. May be hard to see, indicating significant options activity, something to get your attention. All right, finally, let's take a look at NVIDIA. In the case of NVIDIA, traders were in the morning buying calls and selling puts. Another flow alert right after the open. Let's go back to Bookmap. And we need to look at Amazon. So not a lot of range in Amazon, but traders were buying calls. And note that 145 is the key gamma strike. Looks like that may be acting as support now. Note also the high liquidity at that level. That liquidity typically comes in at the cash open. You can see here at 114 and remains in the order book until it's filled. That's typical for stocks. Finally, let's take a look at NVIDIA. Remember, traders were buying calls and selling puts at the open. Note all the green volume dots, a lot of aggressive buyers on the way up. All right, so bullish day in NVIDIA, helping to drive the indices higher. All right, Aspire to Trade wants to take a look at NQ. All right, let's do that. All right, I'm not sure how to pronounce your name, Herina, Herna. Ask how much for Bookmap. Go to bookmap.com. There are a couple of different versions. Just go to bookmap.com and you should be able to find out all the information about subscribing to Bookmap. And GH, sorry, I don't have GameStop in Bookmap. And Sean asked, can you get a sense in Bookmap on the general feel for the market, bearish or bullish? All right, so I've talked about my first of all, my planning process, and I develop a thesis. So I talked about my actually, maybe I didn't mention my thesis, but I was looking for higher volatility for the day, more of a trend day since the gamma notional was negative, and also somewhat bullish based on the lack of shifts in levels, and also the minor increase in VIX yesterday showed me that traders were not really concerned about downside movement. They really weren't positioning themselves in the options market. The put walls all remain the same. And the NDX put wall actually moved higher, so traders were not really positioning themselves for lower prices. So my thesis for the day again was higher volatility, looking for a trend day due to the negative gamma environment, also bullish based on the lack of shifts in levels and VIX. And then during the day, I'm watching order flow and hedging flow, so that obviously the movement changed somewhat, the trend changed somewhat. Here on Bookmap, I can see it with just at a quick glance, of course, price action, and then also in the subchart with CVD. And then I showed the example in Spotgamma Hero of the sharp shift in hedging flow, options trades and hedging flow from bullish to bearish right around 1010. All right, so WRB wants to ask about RUT, IWM, and Tesla. All right, so I don't have RUT or IWM in Bookmap. We can take a quick look at Tesla, and then we'll go to Hero. Oh, I didn't read all of your questions, Sean. Yes, that would be for movement of put and call walls. Yes, so put and call walls, that is a very important part of my planning and preparation and thesis for the day. If call walls and put walls are moving lower, that means to me that traders are looking for accepting lower prices. If the put walls and call walls are moving higher, that indicates to me that traders are looking for, accepting, and positioning themselves for higher prices. All right, folks, I need to wrap it up. Sorry, WRB, I got something at 2:30. So thank you very much for watching Thanks for your questions and comments. I love these interactive sessions. Thank you so much for asking so many questions. It's really great when you're participating like that. So again, I appreciate it. All right, everyone. Thanks again. Have a great weekend, and I will see you on Monday. Thanks again. Bye. Yeah, this is Doug Pless, and I just wrapped up my session. It looked like your technician just drove off. If you could send him back, I will let him in. All right, so they have repaired it. Well, I didn't leave the door open, so they couldn't get inside. All right. All right.